How I actually think about this is I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. That's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade.
In this captivating video, renowned macro investor Raoul Pal and digital asset expert Dan Tapiero dive deep into the seismic shifts in global financial markets, focusing on the unprecedented opportunities in the crypto space. Drawing on Pal's vast experience as a former hedge fund manager and co-founder of Real Vision, they discuss the trillion-dollar trade of the century, the powerful forces driving business and credit cycles, and the transformative impact of AI and technological advancements. With insights on the future of macroeconomics, crypto adoption, and how investors can position themselves for massive gains, this video promises an eye-opening analysis of wealth creation in the digital age.
Yeah, so very simply, something I call the everything code is from 2008, we had a global debt reset. Now, as opposed to letting go of all the debts, what they did was cut interest rates to zero and said nobody needs to pay interest rates. Okay, that was a huge advantage for the system, and everybody reset their debts for this 3 to 5 year sector. So then the debt refi cycle, when they have to refinance the interest payments and the debts, drive the business cycle. The business cycle's always been the credit cycle. So now it's become almost perfectly 4 years. The only other time in history it was perfect like this was back in the 50s and 60s after World War II and the financial repression then. So there's financial repression going on, but it goes in this 4 year cycle. The 4 year cycle happens to be the crypto cycle, the US election cycle. It's all the same thing. So it doesn't matter what you label it, but there is a cycle that's going on, and we're just coming into it now, which is we've now got $10 trillion of debt to refi. You have to refi the interest payments. Usually what they do is they inject enough liquidity into the system to pay for this because there's not enough GDP growth to pay for it all. And so we go on to the next cycle. So that's really what drives all assets right now. Everything is basically correlated. But out of that, there's one asset that does a lot better because it's got the secular adoption curve, which is crypto, plus the macro tailwind of debasement of currency and the cycle. So that's where we are in the cycle now. Zoning into election year. Well, this is when they start giving out money. They also have a lot of refi to do. So it tends to be a very good back end of the election year. And then the following year tends to be very, very strong too. But this is a global thing as well. Every major central bank is refining their debts in the same cycle. The Europeans, the Japanese, the Canadians, the Brits, and the Chinese. Now, what you always look for in these refi cycles is who's the weakest link, because they're likely the ones to do the most stimulus. It's probably China this time around. Just came on the tapes just now. I think Felix actually just tweeted it out. There was a Bloomberg story that I've been talking about for a while, is the US and China have agreed to kind of help each other. So we know the Chinese need to stimulate.
What did they say?
Well, they've said, let me see if I can find the exact tweet.
Felix?
It said, it was exactly what I've been writing about in GMI. They said, China's central bank says a meeting in Shanghai produced an agreement with the US Treasury to appoint contact people to deal with any future financial stress. And it's all dollar debts, right? So they've got a dollar shortage. And what they're basically saying here is the Fed will get dollars to them. I think this is one of the reasons what Japan has been doing in the yen as well, because the euro dollar market is driven through the Japanese. I mean, I was looking at the 10-year bond rate, which is actually a big influence on the crypto price, bizarrely. And 10-year yields in China are at like 2.1% or something, and they just look like they're going to approximately zero. And we know this because this is the Japan playbook, right? When you've got an aging population aging as fast as that, you've actually lost control of your growth engine. So the natural rate of interest rates has to be much lower. And it shows you've got a debt crisis. And what we're seeing now is the flip side of everything that Dan's saying. So the flip side is people start cutting rates. You start easing conditions. Bond yields start to fall everywhere. The dollar starts to fall. That's right. Now it means it eases financial conditions for everybody. That drives the business cycle. As the business cycle picks up, people have more earnings. They invest stuff. Markets go up. And that pattern has always gone on, the business cycle. It's a combination between governments and central banks. These are not separated entities anymore. So one group needs to refi the debt and add new debt. The other group has to make sure it's managed. So the Treasury and the Fed, well, you see, liquidity in the US is Fed net liquidity, which is the Treasury General Account, which is the Treasury, which is the reverse repo, which is somewhere in between the Treasury and the Fed, and there's quantitative and the use of the balance sheet. So they're all three joined at the hip, and they manage that liquidity flow to manage this process. And Dan's right, because they know is once they start unleashing the spigots, then the reflexive buildup happens. And guess what? It generates capital gains. They get capital gains tax. It starts financing deficits. It's kind of, this cycle is the clearest I've ever seen macro in my life because it's so cyclical. Now, does that last forever? Probably not. But right now, it seems the most clear I've ever seen it. You don't have to worry about the shit that Dan and I used to worry about. Maybe just 5, but either way, it's going to be sticky because of the AI changes and technology. This is not going to mean revert. I think that the all-time low of employment is in as a percentage of the overall population. Yeah. I mean, this is the simplest way I can put it is this is the biggest deflationary nuclear bomb we've ever been given. And people don't understand it yet. They're still arguing about, secular inflation in the 70s again. I'm like, are you fucking kidding me? You don't understand what's about to happen. I think it's like, because we're retiring a load of people that are going to die, we're replacing with more and more robots and AI. So you actually increase GDP growth. How it gets distributed, who the hell knows? We'll figure that out when it happens. But I don't think we're going to lose jobs yet. I think the next 10 years is probably about having superpowers where we can do stuff with AI. They all have to finance the same deficits. There's no way around it. There's no way you can use austerity to get out of this anymore. It's way too big. So no, we've seen it. Every political party since 2008 has done basically the same thing. So I don't think it makes a difference. Dan, do you think it makes much of a difference? Macro winter, spring, summer, and fall. This is macro summer. The dollar's falling, rates are coming down. We've got to refi all the debt. I mean, this is usually as good as it gets. The ISM starts picking up, the business cycle picks up, it becomes reflective, investment capital comes in. That's crypto. That's right. I mean, basically, if you think about it, as the business cycle picks up, which it will, earnings pick up, therefore the events business picks up, which means sponsors spend more money on advertising, which means subscription stuff picks up. And before you know it, the whole thing works. So that's what lies ahead. You've gone through all the tough times. Well, we all have. What lies ahead should be good. And as Dan said, we all have to be much more careful about adding people because people can be replaced by efficient processes with AI. Well, Jason, you and I were talking about this the other day. I mean, it's like, okay, the world is changing fast. But if I was that family office group, what would be the right allocation for this point in the cycle? Well, as Dan said, it's a reasonable chunk of crypto. Most family offices I see start at like 1% and end up at 20% over a cycle. So I think somewhere 10% plus works well. You want to be heavily technology because technology is in a secular bull market. You can probably own bonds finally for a bit, make a bit of money there. It's so straightforward to do. You can get your technology investment. The NASDAQ has been producing 17% returns annually since 2011. I mean, that's huge. While the S&P does 8%. So, I mean, Bitcoin's at 147%. So it's a whole different game. But yeah, I mean, I would just be growth orientated, all in on risk. That's what it should be. What Dan has raised the point is fascinating because these big family offices are the complete opposite. They are super risk adverse. And you're like, and this is the reflexive thing that Dan talks about as well, is these guys are all going to end the cycle over their ski tips long again.
Oh, yeah.
That's how it always works, right? They're just not there yet. Generally, every time I've sold, it's been a mistake. And actually what you should do is look forward to the bear markets and add to them. Really, I mean, I first bought Bitcoin at 200. If I'd have just kept that position, I'd have been much richer. It's stupid, right? But you get absorbed by this cycle mentality. Now, by all means, de-risk a bit, take some lifestyle chips off the table, do something. But this trade is much bigger than a cycle. And you think you're going to sell at the high and buy at the low. You've got another thing coming. You won't. and you'll miss. How I actually think about this is I think the opportunity here is the space is 2.5 trillion today. I think it's going to 100 trillion in line with other asset classes. So that's the biggest macro trade of all time and the largest generation of wealth in all human history. That's the trade. How you want to slice and dice that? Yeah, how you want to slice and dice that's up to you. What risk tolerance you have, but that's the trade. When I first did the first piece of work on Bitcoin back in 2013, I said it was worth $1 million.
Yeah.
And I don't think that's wildly wrong. If Bitcoin's at $1 million, yeah, the space is somewhere close to my target of 100 trillion, or maybe it's 50 trillion. Doesn't matter. It's just gigantic. But speaking to another guy who's very, very famous in the space, not in the space, but just as one of the greatest traders of all time. I mean, he's like, oh, fuck that. I never trade this stuff. I'm like, but you're one of the best traders of all time. He goes, this is far too difficult to trade because it's just much easier to hold on and you can make money and build a business. So I don't know if you're aware, Jason, I've also got an asset management firm that's a crypto fund of hedge funds, so called Exponential Age Asset Management, XPAM. And the other part of this cycle is there's no secondary liquidity in crypto markets. It's bizarre. So what you get is all these early stage people, they dump the tokens, and then there's a few Asian trading shops, a few market makers, and a bunch of retail. But there's literally $10 billion of professional capital in crypto markets. And Dan and I grew up in the hedge fund industry, and that's a hedge fund's dream. There's not enough capital in the space, means lots of opportunities. There's all these dislocations from new tokens coming out, going down 80% because people get liquidity. And these hedge funds can sort out through all the shit and say, hey, this is actually a good opportunity, stuff like that. And really that whole thing is getting us from the idea of this is to get us from the 2.5 trillion to the 100 trillion, give it to the 12 of the best, 14 of the best hedge funds in the world, let them do the allocation. Solana does maybe 10x from here and Bitcoin does 5x or 4x from here, that kind of stuff, typical bull market. And then there'll be the main thing that I'm starting to think through is there is always another layer one race, which is early stage when you don't have proven network effects. That bet is actually a good bet. It's not one you go all in on, but that bet was the Solana bet of last cycle, the ETH bet of the previous cycle. So I'm starting to think through that because, I don't trade, don't do anything. I just sit with my portfolio. So I'm thinking through that because I reckon there's a really good trade to come. And it's a lot of fun, but it comes very quickly and it usually gets overvalued and then goes down 95% afterwards. So we've been in this space for so long and we've had China ban it 3 times, India ban it twice, the US be pro it against it, the Europeans hate it, and it's made no fucking difference. Yeah, a bull market's job is to try and throw you off. Right. I mean, this is a clear, clean macro case for a secular bull market that continues. So your job is just not to get thrown off by the FUD. I mean, people find every reason not to do something when all you have to do is buy it and then not do anything. You and I have been around for a long time, and what you end up learning, because we've both gone down that route as well, is really you learn how to extrapolate all the noise and say, what are the dominant factors that matter?
Right.
And if not, you get caught in this trap of everything feels like a dominant factor. And then you're looking for the linkages between the gold market and some Indonesian central bank who's going to do some grain swap. We've all been there, Dad. We've all done that before.
As we wrap up this insightful conversation between Raoul Pal and Dan Tapiero, it's clear that the future of finance is evolving at a rapid pace, driven by massive macro shifts and the rise of digital assets. Raoul's deep expertise in global markets and Dan's sharp understanding of the crypto space have shed light on the enormous opportunities ahead for those prepared to ride this wave of innovation. Whether you're a seasoned investor or just starting out, the ideas shared here offer valuable strategies for navigating the next great wealth creation cycle. Thanks for watching, and be sure to subscribe for more groundbreaking discussions on finance, technology, and the future of global markets.